intro.
Okay.
Hello, thank you for joining the SALTcast today. This is Danny Wright. I'm joined by a good friend, Clay Ogden, and wanted to bring on a guest today, talk about something other than sales tax, which I know puts a lot of people to sleep, but we'll put you to sleep with something else today, right, Clay?
That's right.
So, yeah, we'll, we've been chatting a bunch actually just leading up to this moment, but I think it'd be awesome, Clay, if rather than me try to do a superb job of an intro, if you want to just introduce yourself a little bit, tell us about yourself.
Sure. So, Clay Ogden. I live actually up in northern Utah. Work for and do national business development for a company called Strategic Risk Alternatives out of Boise, Idaho. My background is having played some professional golf and been involved in golf kind of my whole life, and then got involved in the financial services world and the captive insurance world, specifically 831Bs, about 2015, late 2014, 2015, and have really been involved in the business development side of this industry and this business for 6 years now, and it's been a crazy growth over the last 6 years, and recognizing, to always talking to people about something that they've either never heard of or they've know a little bit about, or, most of the time we get you can do that. So it's fun. It's been a lot of fun. I've got,
Yeah.
Go ahead. Sorry.
That's we'll get into that, because that's one of the main questions I want our listeners to hear, and like really what you guys do, because we have a lot of the same audience, of course. We like to discuss business, and our services, you could say, apply to many of the same business professionals, especially, right? CPAs, we like to talk to CPAs, financial services groups, right, and individuals, just trying to really be on the lookout for their clients and have as many tools as possible, right, to help their clients.
Yeah.
Naturally, with sales tax, it's a necessary evil for businesses doing business across the states or across the nation, and but with that shared audience, right, I thought it would be awesome to bring you on and talk about exactly that, of how you guys work with these business professionals, and so if you want to do that, like I mentioned that part of like you working with and or through, right, these business professionals. So maybe talk about that a little bit if you'd like, but then let's make sure to touch on like what type of business, right, or what are the clients or the businesses that are best suited for strategic risk alternatives, and obviously your ideal client there.
Yeah. So we do, as you said, work through professionals. Every once in a while we'll work directly with a business owner, but more often than not, the business owner likes to rely on their team, right? Whether that's their financial advisor or their CPA or their tax advisor, really to get their input to make sure that this is something that works for them, fits for them, and make sure they have all the pieces in play. And so, more often than not, our largest source of referral and finding customers or finding clients is definitely through CPAs and those that are involved in more tax planning. We work with business owners that do, I would say, 5, 6, 700,000 in revenue, gross revenue, all the way up to a couple $100 million. The bulk of our clientele probably sits in that $1 million to $25 million gross revenue on an annual basis mark. And really what these programs are designed to do is to help a business owner take excess profits and excess revenues out of their business, set it aside to manage risks that ultimately they're gonna manage anyway, or they're gonna pay for anyway. A lot of the things that we've seen over the last 2 years with COVID have legitimized why these programs exist in a huge way. You look at things like supply chain interruptions. I don't see those becoming less of a problem anytime soon. Look at things like brand and reputation damages with social media and everything in today's world. I mean, things can change rapidly, sometimes at no fault of your own. We start looking at things like, audits. Ultimately an audit's going to be paid for by the business owner. And so whether it's a loss of a key employee due to a critical accident or illness, or maybe a judgment or a lawsuit that's brought against you, all these things are those uncommon, unfamiliar, uninsurable types of risk that really is where we bring some efficiencies to handling those types of things from a risk management standpoint.
So they're taking money, like you say, cash flow,
Yeah.
and putting it into essentially a policy, or absolutely is that, like, they're creating their own policy, like you said, insuring risk that maybe a traditional insurance company would not insure.
Yeah, they're gonna. So we would create and form for them their own 831B to set these dollars aside into. We would issue them risk coverages for specific risks related to them, their business, their industry, for these various issues or these various risks. A lot of people have always looked at these as a way to insure things like warranties or service contracts. The auto dealer's been doing this for a long, long time. But there are tons of other enterprise risks on the table that every business is unfortunately going to bear the burden of at some point. And so it's bringing efficiencies to how they're going to manage those risks when they come up, instead of after-tax money from cash flow, potentially using pre-taxed dollars that have been set aside in their own 831B. The way it typically works in the 831B space is premiums that are contributed become deductible to the business, and then when they go to they're going to insure those various risks for a calendar year under that policy period, and then once those policies end, they have those dollars that become surplus, and anything left sitting inside of the 831B is then accessible through dividends, long-term dividends, or potential shareholder loans that they can loan back to themselves, or if there happens to be a claim within that policy period, then that would be the other way of utilizing those monies that have been set aside.
All right. So yeah, what I know, I actually heard about, I don't know if they're 831Bs, but certainly captive insurance, right? That's a common word. I don't know if those are the same or different, or because back when I was in the financial space, right, we certainly promoted, I remember, to a couple clients like something like this.
Yeah. A lot of people are familiar with the word captive, right? It's kind of one of those buzzwords that everybody's heard of or been familiar with at some point. That falls under the 831B space, or it's a piece of the tax code. It's not new. It's new to a lot of people, but it's been around since 1986, and there's large enterprises, Fortune 500 companies have used these types of programs for a long, long time. But it's just over the last 5 to 7 years kind of getting a little bit more into the small to mid-market level. One, from a cost standpoint, and two, just more people, more CPAs, more tax planners are becoming familiar with it. They're bringing it to their clients. And, in today's world, there's never been more risk on the table for a business owner. And unfortunately, traditional insurance companies just continue to scale back what they're willing to cover. And so you got to find ways to manage these uncommon, uninsured risks yourself.
Yeah, and I think you mentioned something that probably makes these more common for smaller businesses than they used to be, is probably the cost of entry, right? Kind of the barrier of entry to set up your own.
Yeah.
It probably used to just be either you had to dump too much money into it, or just the cost, like, to actually like manage it and stuff, was probably overbearing.
Yeah, I mean, honestly, most of the time it made it economically not feasible. The fees would kill the deal right up front, and so it's become much more manageable. For the way we've structured our program is literally to work with the small to mid-market business owner and allow essentially anybody to have a chance to use these types of programs.
Okay. So how often do you have someone come to you that, they hear about it, or you're talking to them, right? And about this, and it may even just be something completely new to them, or they just haven't really thought on it that much for themselves as business owners, and you go through the process and actually help them identify risks that would be insurable, or what does that process look like to kind of help the company identify risks that would make sense to insure under this policy?
Yeah, I mean that happens for sure. I mean, a lot of the time we get the question of, I didn't know I could do that. That's something we can literally, set aside money for. I mean, things like a political risk policy, right? You look at things that have taken place. Back in 2018, we had lots of trade tariffs. A lot of people lost a 20% margin on their product because of that. And then over the last 2 years, political risk policies have kind of been brought to a whole new light, with government bodies deciding who's an essential and a non-essential business, either losing revenue or shutting them down completely. That's something that unfortunately no business can plan for, and I don't know that anybody ever could have dreamed of taking place. But it's those kinds of things that we can help them identify that whether you feel like it's a real risk or a legit risk or not, it's a risk on the table. Those things will only continue to increase. And then every once in a while, we talk with business owners that, no one knows their business better than them. And so a lot of the times we'll talk with them and realize or notice that there are specific things that they have as concerns in their business on a day-to-day basis, or, what if this happens? It would be catastrophic to us. Under the uninsured types of events. And so, our risk management team will collaborate with them back and forth to determine, issuing risk coverages that really, first and foremost, will help them from a risk management standpoint. And then two, make sure that we're, issuing risk coverages that apply to them, their business, and their industry. So.
Yeah, I like that. I mean, a lot of good business sense here, right, as far as looking into these and utilizing them. And I know also with CPA, tax planners, business owners that of course want to be proactive and have good tax planning. You guys don't necessarily sell these as a tax haven or a tax benefit, but I believe there are some tax benefits to these plans, right? Can you talk a little bit about that?
Yeah. I mean, it's no secret that kind of the appeal or some of the benefits inside of the 831B is the fact that any premiums that are contributed will become a deduction to the business in the year that they're paid. And then when those funds come out, assuming anything that wasn't used for claims purposes will come out as a long-term capital gain rate, long-term dividend rate instead of ordinary income. So there's that tax advantage dollar on the backside. Obviously, the client can invest the monies into, stocks, bonds, mutual funds, ETFs, liquid type conservative assets while the funds are inside the 831B. So
is that only after the first year, like after the policy expires and those funds are?
No, that's okay. during the first year. So I mean, there's absolutely benefits there. There's tax benefits there. That's no secret. But as you said, I mean, there's a lot of abuses that have gone on in this particular arena. And so that's why we, as inside of our program, we try extremely hard to make sure that we're setting these up appropriately. We are running these programs the best way anyone knows how, in a very conservative manner. First and foremost, it's a risk management vehicle that does come with some tax advantages for sure. Or
very
hopeful
cool
tax advantages, yeah.
Okay. Talk some too. Just keep a high level, of course, as far as what kind of your guys' role and the management and like what people can expect as far as like what's the value you guys bring and why am I paying you to do what you do and help run this thing for me.
Sure.
Other than telling people a lot more than they already know about these programs in general, right? Just kind of through the entire process.
Yeah. So I mean, when a client decides, hey, I want to learn more, or I want to move forward, or whatever have you, we have a digital link. We'll gather a fact finder and a formation document through a digital link. It'll be submitted to our team at that point in time. That's as part of that process is when we will help identify risks. We'll collaborate on what risks are applicable to them. We base premiums off of premiums that can be set aside off of gross revenues. And so up to 10% of gross revenues can be set aside for various risks on an annual basis. Each 831B can receive up to 2.4 million in an annual year. Once we get the formation document into completed and back to us, our team will follow up with a formation invoice. Once the formation invoice is paid, we'll start the formation of that entity. Probably takes about 7 to 10 business days, sometimes sooner. In that process, we'll help get the EIN, the corporate docs, everything set up on that particular entity, and then we can identify or issue a premium invoice along that way. We'll help set up a 30% reserve account. Once that's set up, then the premiums can be put into that particular reserve account when they're received. Really, what our program or what our role is to help form the 831B, manage the 831B, anything and everything related to that entity, we take care of. And I mean, there's a lot of people in our space that do what we do, but everyone does it a little bit differently. And so our program structure is quite different from what people are used to seeing in a traditional captive, as you said earlier, or 831B. It provides a little bit more clarity, a little bit more transparency, and a lot easier, clearer transfer of risk, which is extremely important, because anyone who's going to use or entertain the idea of using one of these 831Bs, there's a 4-part test that does need to be abided by, and that is a transfer of risk, a distribution of risk. It's got to be fortuitous types of risk, and then the last is making sure that we're following the principles of insurance. And that's something that's been a part of our program always, and continues to be stressed that those things need to be met in order to do this, do it effectively, and do it the right way.
Very good. Yeah, this one thing that comes to mind actually as you talk about that, risks that need to be covered. As you know, we're a just professional services, consulting firm for sales and use tax, right? State and local taxes. And it's what we've done for almost 30 years now. It's all we do. And similar to you, right? Like a lot of our clients are 10 to $20 million a year clients or businesses, upwards of, $1 billion businesses. But, that sweet spot, kind of mid-range, 20 to $50 million companies. But we run into a lot of companies, weekly, even daily, right? But weekly more on the scale that I'm going to talk about here of businesses that we're not aware of what's called sales tax nexus, right? This is right in the wheelhouse, of course, for our typical listener of, companies that are doing business in multiple states and have a responsibility to collect tax from their customers on invoices in those states, and they haven't been. Okay, one of the most extreme examples of this was a e-commerce business years and years ago that we came across. They actually came across us. We opened up a discussion and dialogue, and found that, I mean, here's a company doing tens of millions of dollars, nearly $100 million in 1 year across the U.S., and they were only collecting in like 2 states. Okay, so just a lot of revenue that they had in multiple states where they should have been collecting tax. Well, they weren't collecting the tax. So in essence, the short of it is, if the states came knocking on their door, Department of Revenues went and contacted them and said, you're under audit, and and they required them to collect tax on all those sales. They would have been facing millions and millions of dollars worth of back tax and penalties and interest.
Yeah.
So that actually kind of, the light bulb went off as you were talking, and I said, I wonder, let me actually kind of wrap this first to kind of roll into that of businesses have to make a decision at that point, right? They get to the point, oftentimes we're the one helping them do this risk analysis and actually like lay it out for them in a spreadsheet to say, here is the risk that you have in each of these states right now if they were to come audit you. Okay. Now the question is, state by state, what do you want to do? Do you want to at least stop the bleeding and get registered for a sales tax permit now and just start collecting the tax, start reporting it from this point forward, and you roll the dice and hope the state doesn't find you? Do you want to approach the states? There's programs out there that allow you to approach the state and mitigate some of that past penalty and just some of the past money, you could say, that you would owe them if they found you otherwise. So I'm curious actually if that's something you mentioned. Tax, I know at one point, of like risk that people kind of insure against. I'm actually curious if you think if somebody had, let's say, $1 million worth of potential back tax, they said, we don't want to raise our hand to the state. Or we do, maybe they'll just do a couple, bigger states anyways. Whatever the strategy is, if they are roughly sitting on $1 million worth of liability, but they don't want to raise their hand to the state, but still maybe kind of keep that money on their books in case they get hit up by some of these states under an audit. Do you think that's something where this 831B would actually be useful for a scenario like that?
Possibly, yeah. I would. Any time an audit like that were to come up, that's one of those policies that would be absolutely applicable to most every client and every business, is an audit assurance policy. And the audit assurance policy covers, whether it's a general business audit and the costs associated, or in this case, a sales tax audit, work comp, any kind of a government agency audit would be covered by that particular policy. As far as the question specific to like taxes and fees or whatever, I don't know. That's something I'd have to run by our risk management team and see if that's something that would be covered under, specific policy like that. But absolutely, the audit assurance policy would kick in at that point and help reimburse for costs associated with that kind of an audit, for sure.
Okay.
Yeah.
Yeah, it'd be interesting to get some more details for that. Well, and first and foremost, right, I encourage people to reach out to you and your group, and certainly, the professional services experts, the CPAs, everyone listening, encourage you to reach out, and because there's great partnership opportunities to have Clay and his group, help you help your clients, right? And naturally for business owners and whatnot, it makes sense to look into this. It's that time of year, right? Tax planning.
Yeah, we hear it all the time from those that we work with, whether they're advisors, CPAs, PNC agents, doesn't matter. They view us as an extension of their team, right? We collaborate and work with them, with their clients, whether that be questions or Zoom calls or conference calls or whatever have you. And at the end of the day, really what these programs are designed to do is to help manage cash flow. That's the crux of every business is, in the ebbs and flows of business, if we have the opportunity to set aside money in the good years to potentially need it when some event comes up and or level cash flows at that point in time, that's the ideal scenario, right? And that's why these programs exist. And there's never been anything that's legitimized that more than the last 18 months, 20 months. So
No kidding, because no one could have predicted, right?
no,
Everything that happened to all these businesses, and
I mean,
yeah,
there's plenty of businesses that have thrived, just like every other scenario. There's some that get crushed and there's some that kill it. But unfortunately, the vast majority have suffered in some way, and or had a really really rough stretch at some point in time. And that's where these types of programs, if you file, if you need to file a claim, or it's a legit claim to pull money back into your business to level cash flows, to retain employees, to whatever it is. If you have policies that cover specific events, it's a lot of the times people look at our program, they look at these programs in general, and the appeal is the tax benefits. Every one of our clients always comes back to us a couple years in and says, I view this as more than that, because I just sleep better at night knowing that I've got reserves set over here to handle whatever it is that comes up, when and if it comes up, and I'm not going to worry about hoping I have excess funds and cash flow when it happens. I've literally set dollars aside to manage these random risks. So
that's golden. Our one thing, my tagline in my email is "Peace be the journey," and our tagline, one of our taglines as a company, is always peace of mind. We just constantly are saying it over and over again. Peace of mind. It's all about peace of mind. Like, talk about these things, have the discussion, especially with experts that can help you understand all the options you have, all the details, ins and outs, pros and cons, right, of every option that you have. And this is certainly no different than that, right? That's insurance in general, right? Like, if you're doing it right, it's very much meant to be something that, gives you peace of mind that, for things that you hope never happen in a lot of cases, but when they do, you're covered. And in the meantime, again, the biggest thing, the point we're making here is you can sleep at night.
Yeah, so. It's just that, right? It's not these types of programs aren't to cover any and every risk. A lot of it is to traditional insurance does a good job. Unfortunately, traditional insurance doesn't cover a lot of these alternative risks that these types of programs allow you to do, and it does just that. It is that peace of mind. It helps when and if needed. And it's not a fit for everyone. It's not. And whether it's a CPA bringing it to their client, it's not necessarily a fit for everyone, but it is something that probably should be talked about, or at least looked at, because it could make sense. And if it's not, unfortunately, we've seen plenty of circumstances where the client comes back to their CPA or their tax advisor or whomever a couple years later and says, did you know about this? Why didn't you bring this up a couple years ago? This could have really saved us. And, ultimately it just comes down to bringing ideas to your clients. Because sometimes if you don't, someone else does, and that's a hard conversation.
Yeah, I like that. So tell the audience here, give us just the contact details, kind of process to reach out to you guys and get the conversation started.
Yeah, so we actually rebranded this year. Our new website is 831b.com. So 831b, that's the section of the tax code.com. Or people can reach out to me, on my direct email, clay@831b.com, CLAY. Or, they can text me, call me, whatever. I'm available to answer any questions, help them out, see if this is something they even want to look at. And then when we have someone who's a little bit more involved, whether it be a CPA or an advisor or whomever, we actually have a marketing portal. Our team's done an amazing job of compiling training videos and marketing pieces and origins of 831B documents, everything you can think of. It's an amazing place to learn and kind of gain some information about what these programs are, who they apply to, how they can be applied, etc. So it's our website's a great resource.
Love it. Okay. Yeah, we'll put that in the show notes as well. And thanks for joining us, Clay. Appreciate you taking the time. It was a good chunk of time, and sure it'll benefit a lot of folks. So thank you very much.
Sounds great. Thanks, sir.